Participants, is I'm audible?
Yes, ma'am, you are audible.
Okay, ma'am. Thank you, ma'am. Good morning, one and all present here. I, Dr. Megha Sharma, Associate Professor in Tirthankar Mahavir University, welcome you all on fourth week Women Entrepreneurship Development Program, financially sponsored by National Science and Technology Entrepreneurship Development Board, Department of Science and Technology, Ministry of Science and Technology, Government of India, hosted by Faculty of Engineering and Computing Sciences, Tirthankar Mahavir University. On this 16th day of Women Entrepreneurial Development Program, we have with us very eminent speaker, very eminent personality as guest speaker, Dr. Ravi. He is an associate professor and head research and consultant in St. Mary's College, Hyderabad. He completed his PhD in finance from Osmania University in the year 2012, titled as An Evolution of Finance, Financial Performance of Power Distribution Companies in Andhra Pradesh. He has rich experience of working as associate professor and program director, European International College, Abu Dhabi, from September 2017 to January 2019. He also worked as associate professor in the School of Business in Manipal University, Dubai, from September 2016 to July 2017. He also worked as assistant professor in Amity University from 2011 to 2016. He has completed MCOM in finance in the year 1997. He has completed MBA in finance from Osmania University in the year 2018. He has qualified UGC NET in the year 2012. He is the member of various professional bodies like American Accounting Association and American Finance Association. He is the resource person of various MDPs and workshops organized by Gati India Limited, MCHRD Institute, Government of Telangana, Academic Staff College, Osmania University. Sir, we really feel privileged to have you with us. So please enlighten us by your words. Over to you, sir.
Thank you very much, ma'am. Thank you, Tirthankar Mahavir University, for inviting me again for this session break-even point.
Thank you, sir.
So if the participants are same as I had interacted yesterday, this is just a continuation. Are the participants same, madam?
Yes, sir.
Yes,
Participants.
yes, sir.
Okay.
Yes, sir. Participants are almost same, sir.
Can you give me a second, please?
Sure, sir.
Hello? Akhila madam kadandi. Pardon me. Yeah, can you please allow me to share my presentation?
So please share.
Right. Good morning, all of you, once again, and we will continue our discussion of what we have been doing yesterday. We were talking about the costing for the product and how to decide a price for a product. We calculate the cost, the prime cost, the factory cost, the cost of production, the cost of sales, and on the cost of sales, we add a certain percentage. In yesterday's case, it was 14%. Sometimes they add 30%, 40% also. If there's no competition, companies can go up to 60% margin. And it appears 60% is very high, but there are many other things. Many of you may be knowing that skimming strategy of pricing. They'll fix a very high price and just to skim, the income, high income groups, revenue. And then they'll lower the price. For example, if you look at a laptop or a mobile phone, particularly in the initial stage when it is newly introduced in the market, it is very high. And as the days pass by, the price comes down and comes down. The same quality, even better quality of mobile phone, you get at a lowest price. Okay, you can remember, some of you, there was a mobile phone, very huge mobile phone, and it was very big, maybe 4 or 5 times size of smartphones that we are using now was the mobile phone in those days. So now today we are getting much smaller instrument and much efficient instrument for much lesser price. And at the time, the charges were 12 rupees outgoing and 6 rupees incoming. And think of these days, if you just pay a rental of 300 or 200, it's all free, incoming, outgoing, everything is free. Now 30 years back, 12 rupees outgoing and 6 rupees incoming. Now just pay a rental, then everything is free, outgoing, incoming, unlimited calls all over the country. What is this? When something is introduced newly, whether it is a service or a product, they fix a very high price to squeeze maximum income, maximum revenue from the market. Okay, now our today's topic is break even point or break even analysis. Let us say break even analysis. Now before we talk about it, let's yesterday's analysis was prime cost, factory cost. That's different. Now we are going, we are trying to understand in a different way. The same cost we are trying to understand in a different way. Okay, right. It was factory cost, prime cost, cost of production. That's cost accountant's view. Now we are thinking in of the designation can be anything. You may call him general manager. Now, how a manager at business, right? Uh, I'm muted, madam. Am I audible to you?
Yes, sir. Now you're audible, sir. Hello. Uh, Sir, we are able to listen you, sir.
Participants, sir got disconnected. He's joining again. Please wait.
Yeah. Please pardon me for the inconvenience. Are you able to hear me?
Yes, sir.
Can any one of you please respond, madam? Is it audible?
Yes, sir. Yes, sir. You are
Am
audible.
I audible to you?
Yes, sir. Your PPT is visible, sir, and you are audible, sir.
Okay, madam.
Now,
So fixed costs. Fixed costs, the previous classification is different and this classification is different. Now we are now dividing the costs into two types, the fixed costs and the variable costs. What is a fixed cost? It remains constant, it remains stable for a certain period of time or a certain level of output. It does not increase with the increase in the output production, or it is not less when you're producing less. Let's say there's a pandemic going on and some of the industries, they're not at all doing well and they're not producing anything, but the fixed cost to pay the salaries, you had to pay the taxes, you had to pay the insurance. You can't escape from that, whether you are producing or not. Once you are setting up the business, you had to pay, you had to pay. Yeah, many companies in western countries or even in gulf countries, sometimes they're closed in 1 year's time, they're closed in 2 years time. From the inception I'm talking about. And it is not like in our culture where the companies just stay there in the market for a long time. They're just closed. Why? Because there's a wage protection system or scheme there. According to that scheme, the government insists that the regular payment of the salary by 28th of the month, every month the salary is to be credited. And if it is not done, if it is not done for 3 consecutive months, what happens? The government fines the company huge amount, and that is unbearable. So therefore they had to pay the salaries by 28, whether there's a production, there's a business going on or not. When you are hiring people, it is applicable not just for the citizens, even for the expats. So that's a fixed salary, that's a burden for the company. Okay, that's a burden for the company. And likewise they have to pay the taxes and the insurance. Okay, so these are fixed costs. Now I'll tell you, the fixed costs are fixed up to a certain level of output, up to a certain level of output. But there are 100 employees. Let's take the example of the university. There are 100 employees or 100 faculty members to be more particular, and these 100 faculty members can deliver instruction to let's say 1000 students. 100, at 1:10 ratio, 1000 students can be trained, can be given instruction. And if you want 1100 students, another 100 students, if you want to admit, then you have to employ new people. Okay, new faculty members you have to employ. Or if you want to set up another branch or set up another department, then the costs are different. You need building, the equipment, you need the permissions and licensing fee. All these are costs, and they're one time. Fixed costs are one time costs, and sometimes fixed costs also are called as sunk costs. I think you might have noticed Reliance, they have Reliance Industries. They have opened up the petrol stations, the gas stations all over the country. And after 1 year or so, 6 months or so, they are closed. Why? Because they are not doing well, and they are not able to, they are not able to compete with the local market that is already existing. And the price they have fixed is very high, because unless they fix that price, they cannot operate. And if they fix that price, nobody is coming. So they maintain it for 6 months, and there are so many governmental licensing issues. So whatever be the reason, in 6 months, all the petrol stations were closed, and in some states it may be operating, right? Each petrol station, all the equipment costs not less than 2.5 or 3 crores, excluding the land, the stock to be filled there. Okay, that's variable cost. We'll talk about that later. Now I'm talking about the fixed costs, the machines that are installed there, the equipment. Okay, all that may be costing, the roof that they have to lay, the shed that they have to build, all this costs 2.5 crores. But let me tell you, when it is closed, can you imagine how much they have fetched from each petrol station? When it is closed, all that, when you're taking out, it is just a scrap. It is just a scrap. You can't even get 20 lakhs. You can't even get, hardly you will get 2 lakhs, because that's scrap. All that you have invested there is just scrap. It is sunk cost, fixed cost. Sometimes they're sunk costs. Once you incur, and it is not possible to recover back. Okay. Now, up to a certain level of output, up to 1 lakh units, this is the cost. And if you want to produce 1,10,000, then again you have to go to the next investment. And this is only up to a certain level of output and to a particular period of time. What is this particular period of time? It is not fixed in the long run. It is not fixed in the long run. The fixed and variable distinction is made only in the short term. Let's say in 1960s, what has been invested by Dheeraj Hirachand Ambani, it is not the same. The properties have increased, so much of investment pumped in all these 50 years or 60 years, right? So yeah, up to a certain level of output and to a particular period of time. And generally it is for 1 year. Okay. Now one example, that one uh, you know litigation that you can see here. Okay, look at this. I'm sorry to use this word. Yeah, fixed costs will be same whether you produce 1 unit or 1 lakh unit, if the capacity of the plant is 1 lakh unit. Fixed costs per unit goes down as you increase the output. When you produce, let's say 20,000 is the fixed cost, and when you're producing only 1 unit, the per unit 20,000 by number of units gives you 20,000. The per unit cost is 20,000. When you're producing 2 units, 20,000 by 2 gives you 10,000. The per unit cost is 10,000. And when you're producing 20 units, 20,000 by 20, that gives you 1,000. That gives you 1,000. Okay. And when you're producing 200 units, 20,000 by 200, that gives you 100. The per unit cost is 100. And when you're producing 2,000 units, 20,000 by 2,000, the per unit cost comes to 10. So look at this. As you go on increasing the output, as you went on increasing the output, the per unit cost, per unit fixed cost comes down. This is a phenomenon. But the total fixed cost is same whether you're producing 1 unit or 20,000 units. It's same. There's no change here. And yeah, look at this. If you're trying to plot the output and the cost on a graph sheet, okay, x axis, on the x axis you lay the output, okay, and the cost, cost, expenses, revenues, you will take on the y axis. If you are showing or plotting on the graph, it is like this, whether you produce 0 units or produce 10 units or produce 50 units or produce 100 units, it is the same. Let's say 1 lakh, 20 lakh, 1 lakh, 10 lakhs, 100 lakhs, like that. If you're going on, plot, marking here, right, the cost and revenue, the cost, fixed cost is same. It is not changing. As look at this, as you are increasing the output, the fixed cost is not changing like this. It is not increasing. It is not increasing. It is stable. It is constant at a point. Okay. And yeah. Next is variable cost. It is a cost which varies with direct proportion to the volume. It changes with the output. It changes with the output. Let's say to make one motorbike, if you're using 20 kilograms of steel, to make 100 into 20, 2000 kilograms of steel you may have to use. If you are making 1000 bikes, and accordingly multiplied with 20 kilograms, and that will be the steel required, steel consumed. That's a raw material consumed. What is that we understand? As we increase the output, the material consumption also increases, and the cost per unit, let's say the steel cost per unit, if it is 50 rupees into 20, okay, 50 into 20 kilograms, that's about 1000 rupees steel cost per bike. Okay, so 1000 is for one bike, and if you're producing 10 bikes, 10,000. Look at this. As the output is increasing, so will be your variable cost. It varies with the output, it changes with the output, right? In other words, there's a direct relationship with the output, the material cost or labor cost, whatever you say. All these are variable expenses. Okay, all these variable expenses are directly proportional to the output, whereas the fixed cost, which we have discussed just now, they are not changing. They're fixed, right? Now the total variable cost increases with the output, but the per unit variable cost does not change. Just as we have seen here, as you went on increasing the output, okay, your fixed cost per unit, the per unit fixed cost came down. It is inversely proportional, the per unit fixed cost. When it comes to the variable cost, it is reverse. Okay, it is not like that. It is same. The per unit variable cost is fixed. The per unit variable cost is changing. The total fixed cost is fixed. The total variable cost changes with the output, changes with the production. Yeah. Now you can, when you present the variable cost is like this. When you're not producing anything, your cost is just zero. Zero of the units, cost also is You're plotting the output on the x-axis, cost on the y-axis. When you're producing nothing, there's zero cost. As you're increasing the output and your cost, as you're increasing the output, look at this. This is the cost. This is the cost. Okay. And at this level of output, this is the cost. What is this? This is the total variable cost. Total variable cost is it is changing with the output. Now, in between these two, you have semi-variable costs, or you can also call it semi-fixed cost. The cost which is a combination of both fixed and variable. Okay, and sometimes, yeah, supervisor's salary, telephone expenditure, electricity expense. It is fixed. There's a fixed slab. Up to that, it is fixed, right? Up to 200 units, it is, you have to pay minimum bill of this much. And beyond that, you have to pay. Okay, beyond 200 units, the slab will be changing. Up to 200 units, you just pay the rental, that's enough. Telephone bill or the electricity charge. Beyond that, as you're increasing, and the price will be changing. Okay. So what we pay to the company is cost to us. For the company, it may be price. For us, it's cost. So that is semi-variable cost, partly variable, partly fixed. Then there are costs which are still to be incurred, although a plant is shut down temporarily. Okay, I told you, right? I told you when I was talking about Arindam Chaudhary, right? And he closed it 10, 15 years ago, this Indian Institute of Planning and Management in Hyderabad, and still he's paying the rent, and the rent is some huge amount of crores. Okay, next, break-even analysis or break-even point. Break-even point. What is break-even point? Now, this is what a common word that we use. Most of us who are doing BTech, all the BTech students know it because they're going to work in the factories, and even the teachers, we know it because we have to teach them, whether we are accounting teachers or not, we know it. Break-even point. What's a break-even point? Any of you, can you please respond? Break-even point. Break-even point. What is break-even point? Okay. What is break-even point? Okay, I'll just check it. Yeah. Somebody responded, total cost is equal to total revenue. Yes. It's a point where there's no profit, no loss. It's a point where there's no profit, no loss. Sometime back, one of my friends has set up a supermarket, and he was telling me, I've set up this just for running the business, and now I'm not interested in making profits. I just want the business to flourish. If somebody says this, if somebody says, I'm running the business for no profit, okay, for no profit, that means all the time they are doing this break-even point. They're interested only in break-even. If I just cover the cost, that's enough for me. You are not government. Only governments are allowed to do that, or only governments do that. Not allowed, only governments do that. What is that? When there's an electricity charge, there's a scheme under Electricity Act. What is that? You cannot recover from the customer more than your cost. That's a rule. You cannot, as a distribution company of electricity, you cannot recover more than the cost that you have incurred. Right. It is just recovering the cost. Let's say for producing 1 unit of electricity and then distributing, transmission, all those costs are added up, and they'll calculate per unit we have incurred this, and accordingly they will fix the electricity bill and charge from us. Okay, it's only recovering the cost. Why? Ours is a welfare economy. Now we are slowly turning to capitalistic economy. Now for a long time, ours is a welfare economy. It is serving the people, serving the citizens more than making profit. For a government can afford to say that. Why? For the government, there are other ways to, get the income. There are taxes, many other taxes that it can charge from us, right? But for a business organization, if somebody says, I'm not running this for best of profit, there must be two reasons. Either he is insane or he must be lying. Okay, his intentions are different. He's a different person. His intentions are different and he's speaking something else. So there is profit. Nobody is interested to run the business forever at the break-even point. Break-even point is a point where there is no loss and no profit. Cost covering. Okay, cost covering. Right. And now, yeah, yeah. This is what, yes, this is what somebody said. Okay, I have just borrowed this. Uh, your, yeah, your costs are exactly equal to the, yeah, your costs are exactly equal to the revenue. The total revenue is equal to the total cost. Now, how long will you be in the business so that you will start making the profits? And how many units you need to sell to break even? And how much revenue do you need to generate, okay, to start making the profit? Okay, and these are the questions that a business manager a business entrepreneur needs to ponder over. When you're setting up a business as an entrepreneur, okay, you will come across these questions. When I will be reaching the break-even point, how many units I should produce to just cover what I have invested? Our only tension, our only worry is I borrowed money and I've invested. I've just taken money from my parents. I've invested here and I've just gathered all my savings for a long time. I've invested here. Just let me cover the cost. Let me cover let me get back. Let me recoup what I have spent on this particular business. That is the main concern of the entrepreneur. Okay. So how long will it take, and how many units I should produce, how much of the output I should produce, and when I'm going to make profit, or start making profit. So these are the thoughts, and this can be, yeah, this can be understood, by this can be understood, look at this. How important the break-even analysis is. The answer is total cost is equal to total revenue. That's very simple. Break-even point. Total cost is equal to total revenue. Total revenue is equal to total cost. But how significant it is for a business manager? It is, all these startup costs will be covered. It will help you to recoup all your startup costs. And it is, yeah, it helps to know that how much is needed to just make the company keep going. And it helps in developing, appropriate pricing in the competitive market, so that you will not lose your customers to your competitors, nor needed to exit from the market. And you still have to fund for your business, further your business. To further your business, you need money, and that money, you cannot go on borrowing. You have to generate profit, and the profit is to be used back. That's what called plowing back of profits in the business. Okay, so it is useful in that way, it is significant in that way, and it is, yeah, if somebody says, yeah, there's a nice business proposition, the first question they'll ask is, what is the break-even point? When do I reach that level? Okay, how long will it take? What is the gestation period? Right? So these are some of the questions. Okay, and in the service unit, the break-even point indicates the number of billable hours. You know, it is, if it is in the service, very often what we think is whether it is whether the break-even point is applicable only for the productive or the goods. It is not necessarily for goods, it is also for service sector. Let me tell you, higher the service sector contribution to an economy, more advanced that particular nation is. More advanced. You know, for a long time, the cost accounting data, what we're talking about, the break-even point, the cost sheet, all this is only for the manufacturing.
आप बोलना कुछ सिर्फ बोलो हेलो हेलो
Yeah. All this is only for manufacturing entities. But now this is applicable to these things, the cost concepts, whether it is preparation of cost sheet or preparation of, the marginal cost statement or the absorption cost statement or the process costing. All these are now slowly applying to the service sector. Why? Because 30 years back, the Indian service sector share in the total GDP was
आप फोन खोल दो मैं बंद करने आना फोन लगा किसी को बंद कर दो हम से सेकंड
yeah, it was 15-20%. Now it is more than 50%. If you look at advanced nations like France or United States, it is more than 85%. What? 85% is service sector contribution to the GDP, and 15% only is for manufacturing. They manufacture only. The contribution of manufacturing sector to the total output of the country, total GDP of the country, is just 15%, whereas it is much more in other countries. Okay, whereas it is much less. Whereas it is much less in some of the underdeveloped countries. It may be very less. The same thing, or we can, variable cost, fixed cost, unit price, costs that vary with the production, and fixed cost that does not vary, and the unexpected sales, the unit price. These are some of the issues. The sales, the price, the cost are important in calculation of break-even point. What things to be included in variable cost? Raw material, freight, rental, machinery, fuel, all these things we have seen in yesterday's session. And semi-variable cost also we have seen. Okay, total revenue and profit. A break-even point is a point where there's no profit, no loss. Okay, to present this, there are two methods: graphical method and equation, algebraic method. Before that, let me tell you, this break-even point comes under marginal costing. There are two methods of costing: marginal costing, absorption costing. Absorption costing does not make any distinction. Absorption cost includes the fixed cost also. What they do is, what is incurred at factory, what is incurred at administrative office, what is incurred at sales point. This classification only we have seen in the cost sheet. Okay, they do not segregate what is fixed and what is variable. They are not saying that. There the segregation was direct expenses, indirect expenses. directly related to a product or service, indirectly related to a product or service. So there is no segregation of fixed and variable at that point, right? That is absorption costing. Now we call that method absorption costing method. It's because the fixed costs are absorbed in costing. The segregation is factory administrative selling expenses. And in this absorption, in this fixed costs are absorbed. When it comes to marginal costing, marginal means additional. Marginal cost means additional cost incurred to produce additional unit. To produce one unit extra, what's the extra cost you are incurring? That means marginal cost is a changeable cost. It's variable cost. It's variable cost. Okay. Now, marginal cost equation. I'm not allowed to annotate. Okay. Yeah. The marginal cost equation. Marginal cost equation is, I'm not allowed to annotate, so I'm just speaking out. Sales minus variable cost is equal to fixed cost plus profit. Sales minus variable cost is equal to fixed cost plus profit. Again, I'm repeating because it's not presented there. So I'm repeating third time. Please don't mind. Sales minus variable cost is equal to fixed cost plus profit. This is called marginal cost equation. Okay. Now, sales minus variable cost is contribution. Sales minus variable cost is contribution. Fixed cost plus profit also is contribution. Most of the decisions are based on the contribution, that is excluding the fixed cost. Excluding the fixed cost. Sales minus variable cost. Your decision depends on the contribution. What is the contribution made? If you deduct the fixed cost also from the sales revenue, what happens? In the initial first year, second year, you will be disappointed because there is a huge amount of loss. Okay, maybe if the gestation period is 5 years, for example, for the power plants or for power plants or some of the mines, you will take 2-3 years only to dig it, okay, and take out all the mud just to reach the mineral, maybe or metals, or the ore, be it iron ore or be it aluminum ore. Even to take out the mud and just to reach the spot, it takes maybe 1 or 2 years. So that's a gestation period. Initially, if you include all the costs in the revenue, there's a huge loss. There's a disappointment. So therefore, sales minus variable cost is used. Contribution is what known as. Contribution is the decision maker for the entrepreneurs. If you're setting up of, if you're thinking of setting up of a business, don't deduct all the expenses. Don't deduct all the expenses. This is what one gentleman did. He has given me a project. And that project will continue for so many years. And I just asked 15 lakhs, and he sanctioned it. And in the first year, that project gave 30 lakhs. So 30 lakhs, he got back, and out of the 30 lakhs, 15 lakhs are deducted. And 15 lakhs, still there's a profit. And in spite of that, he is not happy. He's used to making 100% profit. So 50% profit was not satisfied. It was not giving satisfaction. Now, luckily, he got 50% profit, but for any kind of that similar project, it is zero. The profit is zero because you cannot include all the fixed costs. So I have included the fixed cost, including the fixed cost. There is no, there's a profit left over. Okay, and even that profit he is not satisfied with. In the initial stage, as an entrepreneur, we do not or we should not anticipate the profit. Okay, and if we are deducting all that we have spent on our business, then that's just foolishness. That's ridiculous. Don't deduct the fixed cost, just deduct the variable cost, the running cost, what we call working capital. What's working capital? Just to meet our daily material requirements. Okay, what all we have to pay is running cost or working capital. You just deduct. That's called in costing variable cost. Deduct that variable cost from sales, you get the contribution. Contribution is the decision maker. Okay, so we'll just see the equation method of calculating break-even point. And there's a concept called cost volume profit. Okay, according to that, P is equal to, okay, P is equal to, or Px is equal to Vx plus Fc plus profit. Fc plus profit. P is the price per unit, X is the number of units, and V is the variable cost per unit, and Fc is the total fixed cost. Okay, this is what I told you. The same formula is rewritten here. Sales minus variable cost is equal to fixed cost plus profit. Sales, V is the variable cost per unit, variable cost per unit. Then P is the price. Let's say P minus V. This is what? S minus V, price minus variable cost. If you bring this P here, it will become S minus V or P minus V is equal to fixed cost plus profit. If you want to calculate BP in units, BP in units, break-even point in units, this is the formula. This is the formula. Fixed cost by contribution. I'm sorry, this typing is not proper. Break-even point in sales in units is equal to, break-even point in units is equal to, okay, is equal to fixed cost by contribution. Okay, what is this contribution? Price minus variable cost. Selling price minus variable cost per unit. Selling price, P is selling price per unit, variable cost per unit. V is variable cost per unit. Selling price minus variable cost per unit. Fixed cost by contribution. P minus V is contribution. So that gives you break-even point. Let's say there's a, okay, we'll take it proper. Calculate break-even point in sales units. The price is 15, variable cost is 17, total fixed cost 9,000. 9,000. So what's a break-even point? 9,000 by 15 minus 7. 9,000 by 15 minus 7. That's break-even point. That is break-even point. It is 1,125 units. Contribution is 15 minus 7, which is 8. And fixed cost 9,000. 9,000 by 8 is 1,125. That's break-even point in units. How many units should I produce and sell to reach the point of no profit and no loss? Initially, you will be making loss and you will reach a point where there is no profit or no loss. Now, the entrepreneurs are eager to reach this point, break-even point. Once they reach the break-even point, and they get confidence. They get confidence to further the business. So in this case, it is 1,125. The break-even point in value, if you want, selling price is 15 already given. Selling price is 15 already given, $15. And the break-even point, the number of units that you need to produce to achieve the point of no profit or no loss is 1,125. So multiply with the selling price, you get the break-even point in value. You need to generate 16,875 rupees or dollars to say that you have achieved break-even point. Okay, you have achieved break-even point. And graphically, if you present, this is how it looks. This is how it looks. On the y-axis, plot the cost and revenue. This is, you plot the value dollars or rupees here and units on the x-axis. On the y, value, and in the value, it's the cost and revenue. Cost and revenue are plotted on the y-axis, and units sold are plotted on the x-axis. Okay, as we are producing, okay, there is no change. Let's say if this is 10, if this is 10, this point is 10, yeah, it is horizontal. The fixed cost line is horizontal to the x-axis, indicating there is no change in the cost, fixed costs. Okay, at 3 units of production or 3,000 units of production or 6,000 units of production, there's no change. There is no change. And look at this, the total revenue curve. Okay, before going to the total revenue, we'll just see the total cost. Total cost. Your variable cost, if you are producing no bike at all, not even one bike, then there's no cost at all you're incurring. So your variable cost, look at this. If this is the variable cost, there's no cost, variable cost incurred, changeable cost incurred, because there's nothing produced. As you start producing your variable cost, okay, this is the production. As you're producing, the variable cost will be increasing. Look at this, it goes on increasing, and this is the variable cost. This is the variable cost at 6,000 units. This is the variable cost at 6,000 units. Now, this point, if you say that I want to know the total cost, just take this line, and put it at the point of fixed cost. At no units produced, the total cost is 0 units of variable cost and maybe 10,000 rupees or dollars of fixed cost. So the total cost is $10,000. Okay, so that is why the total cost line is starting from 10. It is starting from 10. It's not starting from 0, because there is a fixed cost involved in the total cost. Fixed cost is involved. Total cost is equal to fixed cost plus variable cost. Therefore, it is starting from here. So it is starting as the output is increasing, it is moving upward to the right. That's total cost curve. And the total cost, because of the influence of the variable cost, it is changing. Okay, and because of the fixed cost, it is starting from a particular point, maybe 10 here on the y-axis, not from the origin, as in the case of variable cost. Okay, now one more thing we can observe here is there's a point of no profit, no loss. Look at this. The total revenue curve is this. The total revenue curve. There's no profit. As you are increasing the output, your total revenue is increasing. At this point, at 3,000 units, the total revenue may be $20,000 or rupees, 20,000. At 3,000, the total revenue is 20,000. But the total cost also is 20,000 at 3,000 units of production. At 3,000 units of production and sales, the cost is 20,000. The cost is 20,000. The revenue also is 20,000. What is this? For some time, the total revenue curve is below the total cost curve. For some time, it is below. But at a particular point of time, as you are increasing the output, okay, the total revenue curve rises above this cost curve, from this point it starts rising. It starts rising and it moves upward. Okay, and there is a gap between the total cost line and the total revenue line, and this gap we call it profit region. This is all profit region. The green region is profit region, and there's a loss region. Below this point, the total revenue curve is below the total cost. The total cost is above this, and therefore there is a loss. Cost is more than revenue. Loss region. This is loss region. Right. Now let me ask you some questions here. What could be the reason? What could be the reason? What could be the reason for the total revenue curve to rise above the total costs? What could be the reasons? What might be? What could be the reasons here? Any answers, please? Or you can just put it in the box. You can type what is the reason for the revenue curve to rise above the cost curve. Any answers from your side? Kindly, yes, there's one message.
So,
Yes,
so
ma'am.
maybe because the expenses are more.
Madam?
Maybe, sir, because the expenses are more.
My question is why the revenue curve rose above the cost curve? Yeah, because expenses are more. Okay, that's what. Why expenses are more? No. When expenses are more, then there's no question of revenue curve rising above. The total cost will decrease as the production goes up. Why yeah, that's very good. Thank you, sir. The total cost will decrease as the production goes up. Why the production goes up? Why the cost decreases? Total cost decreases. And when we look at the behavior of these costs, it is like this. The variable cost curve. Yeah, there's one more. Due to variable cost element. Okay, thank you, sir. Yeah, when we look at the behavior of these costs, be it fixed or be it variable, yeah, the costs are like this. In the long run, this fixed cost curve is not horizontal to the x-axis. Look at this. If the limit of this fixed cost is only to 3,000 units, at 3,000 units, if you have to expand the plant, then it will rise. It will rise like this, okay, to 20. Then from 20 again, it is constant. It is constant. From 20, it is again constant. Okay, then it is constant. Let's say at 6,000 units, again, the plant capacity is not sufficient. Again, it will rise to another 10,000, right? From here, again, it goes on constant. Now you will see stepwise increase in the fixed cost. This is the behavior of the fixed cost. Okay. Now, variable costs, the per unit variable cost does not change. That's what I said. But the per unit variable cost may change. How? You know, as a student, if I teach the student of BCom or BBA, I say simply there's no change. But if I have to, if some interesting student comes and says, argues, then I had to come out and say, hey, it is not like that. It is like this, how it is. It is, the variable cost per unit also will be changing. How it will be changing? It will be changing, as you're increasing the production, you will place the order for huge quantity. When you're placing order for huge quantity, what happens? You will avail some discounts. Large quantum you will place the order for, and you get some discounts. So on wholesale basis, whatever discounts you get, that's saving for you, right? The per unit cost comes down. The per unit cost comes down. Okay, this is one reason. On one side, the cost comes down, okay, because of this per unit variable cost coming down, okay. The revenue margin, the profit margin may be another reason. The reason for profit to occur is cost is coming down. This is one reason. On the other side, as you are introducing, sending the products into the company, right, into the market, I'm sorry, into the market, people started tasting the quality of your product or service, then they started using, and demand for your product and service increases, and it goes up. On one side, the sales volume increases, and the other side, the cost comes down. So therefore, there's a huge amount of space in between these two. That's profit. Initially, when you're producing and selling, people are not interested, however much you're trying to convince. But there is some saturation point even for that rejection of your product. Okay. And not only that, you will also start refining your product and trying to reinvent your service and introduce into the market. That is the reason that the total revenue will be above the total cost curve. So therefore, the point where there is no profit and loss is this. This is called as break-even point. The total cost curve is overtaken by the total revenue curve. Total revenue curve. Above this point is the profit region. Below this point is the loss region. And this is called as angle of incidence. This is called as angle of incidence. Yeah. CVP analysis. CVP analysis. I'll just tell you, introduce, two more concepts, then close. CVP analysis. It's a volume. It's a cost volume profit analysis. Volume means what? Sales volume. Cost we know, we have done exhaustively. Profit is the difference between the cost and the sales. The difference between profit and cost and sales. Right. The relationship between these three, okay, is discussed in marginal costing. Okay. Yeah, this is what I told you. Contribution is equal to sales minus variable cost, or price minus variable cost per unit. This is contribution ratio. Yeah, the other way to calculate the contribution is variable cost plus fixed costs. Right. Calculate break-even point. Another case will take break-even point in units and sales in dollars or rupees. When selling price per unit is $35, variable cost per unit is $28, and total cost is 7,000. It's just similar to our previous problem. Yeah, can you just give me a minute, please? I'm so sorry. This is an urgent call. Yeah, contribution is sales minus variable cost, selling price minus variable cost. If you're taking total sales, then you have to take total variable cost. If you're taking per unit sales, that's selling price per unit. If you're taking sales per unit, then you have to take variable cost also per unit variable cost. So the difference is contribution, and fixed cost by the contribution is what gives us the break-even point, and we have already seen it, and we'll just this just for practice. Okay, so now I'll just close it, and today since this is the last session for me with you, I want your doubts, more of your doubts and more of your questions, and so that I'll try to explain your doubts and clarify. And particularly those who are thinking of setting up business units, and there are many more things, you should be knowing the net present value, you should be knowing the internal rate of return, you should know the profitability index, okay, and you should know the working capital requirement for the business that you're going to set up. Let's say if your sales are to be are to be 50% on credit, and out of that 50% and on credit, and at 50% which is on credit, how much of the money is locked up in that credit sales. So all these things you need to work out as an entrepreneur. Net present value, many of you may be knowing the net present value, the total investment that you have made, the present value of that, and the present value of the future earnings. What you have invested is the present value, okay, and you had to apply the time value of money. That is, the money value decreases with the passage of the time, right? Today's 1 rupee value will not be 1 rupee after 1 year. It will be certainly for sure less than 1 rupee. It may be 99, or it may be 90, 98 or 90. If the rupee gets discounted, deteriorates by 10%, it will become 90 paise after 1 year. Okay, so this time value also you have to consider when you are taking up when you're assessing the project. Time value is applied to the cash flows, okay, the cash inflow, the money that you have pumped into the business as an entrepreneur, and the money that is generated, the cash flows into the company. Okay, cash flows into the company, out of the company. So you take a difference between these two. Okay, that is a different analysis, net present value. Okay, very often people think the internal rate of return is the break-even point. No, that's a different analysis. Break-even point is different analysis. What is internal rate of return? What is the rate? What is the rate at which your cash inflows and cash outflows are equal? At what rate your cash inflows and cash outflows are equal? What? If you're investing 10 lakhs, and if your project is going to give you 3 lakhs, 5 lakhs, and 2 lakhs and 1 lakh respectively, okay, let's say all that amount becomes 18 lakhs, right? 18 lakhs for 5 years. Every year something is given. For 5 years, 18 lakhs is the total. And what you have invested is 10 lakhs. And any layman thinks that the difference is 8 lakhs. Oh, I'm making good amount. There's a profit of 8 lakhs. No, the present value of those future earnings are not the same. So the 3 lakhs that you're going to receive after 1 year is not 3 lakhs, but less than that, discounted by 10%. Okay, if the rupee gets deteriorates by 10%, and the 5 lakhs you will receive after 2 years is not 5 lakhs worth, it is less than this. Why? Because the purchasing power of money goes down. All the 18 lakhs worth after, that you get for 5 years worth now the present value of those future earnings now is less than 18 lakhs. It may be 9 lakhs. So if it is 9 lakhs and you have invested now 10 lakhs and in future you're getting 9 lakhs, is it worth going with that proposal or proposition or project? It's not worth, because you're losing 1 lakh. You have invested 10 lakhs and you're getting only 9 lakhs. And you may say, sir, I got 18 lakhs. No, the worth of those future earnings now, when you apply the discount rate, it is only, or in some, in layman's language, what you can get for 9 lakhs now, you will get, you will get the same item. The project that you can, the project you can invest in, the project that demands 9 lakhs now is going to demand 18 lakhs after 5 years. That's a meaning. What is worth now 10 rupees is going to be, it's going to be 20 rupees after 5 years. That's a meaning. Okay. So the money value gets deteriorated. Okay. These points also ought to be included. Okay. In when you're taking up entrepreneurship. Okay. And also working capital, the cash management, you must understand the debtors management, the receivables management, and stock management, inventory management. That's called inventory management. Inventory, as we have seen, there's raw material, there is finished product, there's work in progress. Okay, inventory management. You cannot pile up the inventory because that's money. You had to pay for it. When you pile up the money, when you pile up inventory, that's money. And if that money would have been invested elsewhere, you could have made some more business, right? So that's not a good idea to pile up so much of stock in the company. And similarly, you cannot just be miser. Okay, you cannot be miser. You can just keep meager amount of stock, and when you do that, suddenly if there's a huge demand, the customer will shift to the next competitor and you lose the customer. That's another thing. And uh, one more thing here, when it is, yeah, so inventory management, receivables management, okay, creditors management also. You need to keep frequently paying them. Okay, keep frequently paying them. And also there are some concepts called LIFO and FIFO. Okay, that's first in, first out, last in, first out. And there are inventory management techniques or recording techniques, right? So all these things one must be aware, if at all, if one is planning to set up business. And there are many more things. And thank you so much for the university to organize such an event. And this is going to be fruitful, and maybe many people will be taking it as a challenge in the days to come, particularly the students, and it may be a research interest for the faculty members. I'm waiting for the questions, and yeah, I just want you to ask me questions related to the project proposals. Okay, how the project how the project is to be executed, and what are the cost elements, what are the financial elements, and what financial resources are available, questions like that. Any questions, madam?
Thank you so much, sir. Any question from participant side? You can directly ask from the sir or write on the chat box also.
What are the problems that an entrepreneur faces in terms of finance and accounting? Okay, and you may have so many thoughts. Okay, this is a challenge, this could be the challenge. If you speak out, then I'll know, and then I can try to clarify on that. Why? Because it's easy to speak, not easy to listen. So it's better you speak than listening.
So maybe just because it's a very informative session, sir. You really explain the concepts in a very simple and easy manner, sir. Like fixed cost, total cost, cost, volume, profit, in a very simple and easy manner, sir. Thank you so much, sir.
Thank you, madam. Thank you.
Participants, please ask any question from the sir. related to finance resource, related to financial resource, or any other topic on which you want to know or to learn more? Okay, so maybe they will mail you, sir. We have your email ID also, sir.
Yeah, you're welcome to ask any questions on this topic, the cost management, absorption costing, marginal costing, cost sheet, how the cost sheet is prepared for a job, or what is break-even point, or what is net present value, what is capital budgeting, what's working capital management, what's time value of money, how the EMI is calculated. So all these things you can shoot. Yeah, if there are no questions, I think you can take a call, madam.
Yes, sir. So thanks, sir, again for accepting our invitation. Definitely, sir, we are enlightened by your session. Of course, we learn new things and new concepts related to accounting. Thank you so much, sir.
Thank you so much, all of you. And I'm so thankful to the organizers, the vice chancellor, the chancellor of the university. I'm so thankful for the opportunity. Thank you so much. So nice of you. Good day. Take care.
Gulista ma'am, please share the link for quiz.
Sure, ma'am. I'm just sending. Participants, I have just posted the session 1 quiz. Kindly complete that quiz. And for the second session, Dr. Mahesh will join by 11:45. So till the time, we'll take the break of 15 minutes. Our next session, session 2, will be start by 11:45. Till the time, please complete this quiz.
Hello, good morning. Mm, Hello. Hello, good morning, madam. Gulista, madam.
Yes, sir. Yes, sir. Welcome, sir.
Good morning, sir.
Good morning.
Ma'am, shall I start?
Sure, ma'am. Please start. Megha, ma'am, am I audible?
Yes, ma'am, you're audible.
Yeah, you may
So-
start, ma'am.
Yeah. Good morning, one and all present here. I welcome you all on 16th day of Women Entrepreneurship Development Program, Session 2. We have with us very eminent speaker, Dr. Mahesh R. Prajapati, as a guest speaker. Sir is having an experience of 9 years in teaching and research. He is currently working as assistant professor and head Department of Financial Management, International Agri-Business Management Institute, Anand Agriculture University, Anand. He has an expertise in managerial accounting and control, financial management, agriculture, business management, financial market and services. He guided 27 MBA students and 2 PhD students. He was co-principal investigator in World Bank funded ICAR project under NAHEP. He has published 10 national and 6 international papers. He has attended 11 seminars and conferences. He organized 3 workshops and 3 training programs. He organized a knowledge co-creation program for young leaders for India on agriculture business tourism course at Federation of World Youth Akita, Japan from 17 July 2018 to 31st July 2018. This program was organized by Japan International Cooperation Agency, that is JICA. Total 15 members were participated from India, and he was the only one member selected from Gujarat. Really, sir, we feel privileged to have you with us. Sir, kindly enlighten us by your words.
Sure. Thank you, madam, for introduction. Uh, First of all, just I would like to know that what is the background of the participants? Because see, whether I would like to start from the this simple uh, transaction to how to prepare the financial statement, and then we will go for that. That is why I would like to know that what is the background. So accordingly, I will discuss.
Sir, they are academicians from different backgrounds. Some are from CS and some are from management stream also, sir.
Okay. So here, basically, I have prepared this topic with the point of view of the startup. This when any startup is going to start this any entrepreneur will going to start his business. So these are the point he or she has to keep in mind while especially understanding the financial statement. Okay, so meanwhile, if any participants have any doubt or query, you can ask. Okay, otherwise you can also note down the question, and later on at the end of the session, we will going to discuss the queries. Okay, so just I'm sharing my screen. Just a minute, wait. I think screen is visible to all of you.
Yes, sir, it is visible, sir.
Okay. Okay, just giving the brief about this session. What I have, especially I will say that whatever I have information and whatever my teaching and research experience, accordingly I will going to share my views on this, how to understand the financial statement. Basically, I have arranged the session from the person who does not know about what is accounting and how this from simple transaction to how to prepare the financial statement and how he or she will going to be understand the financial statement. So accordingly, I have arranged this session. So simply, what do you mean by accounting? So accounting is just simply thing is that this you might be also knowing that different types of the business organization are there. Like when we see the sole proprietorship firm, partnership firm, then HUF, private limited companies is there, public limited companies are there. So different organization will going to be prepare the financial statement, okay, at the quarterly, half yearly, and yearly. Okay, so the purpose behind this simply what do you mean by accounting? So accounting is just simply whatever the transaction happen in the organization. So first simply need to understand how to identify whether it is relevant to my organization or not, then record, summarize, analyze, and interpret that information and communicate that information to the respective users. When we are talking about the users, so different users have the different perspectives about the records. Just like I'm giving the information as a owner, what what is the main major outcome of my record? So majorly, I will definitely going to see each and every aspect of the transaction, what its impact on my routine operating activity, whether the routine activity is coming through the revenue, more revenue or expenses, then whether through that the organization is earning the profit or loss, what is the overall impact on the assets and liability, simultaneously, what is the overall cash inflow or outflow. Okay, so this is the perspective of like owner. Same way, if suppose I'm considering the government. So government is mainly interested on whether the organization, what is the overall earning, what is the overall tax the respective organization is paying. Simultaneously, whatever the rules and regulations is quoted in the respective act, like Partnership Act, Company Act. So whether the respective organization is following that rules and regulation or not. So this is the interest of like a government. Same way, suppose I would like to consider the investors. So investors are definitely going to interested in that what is the overall uh, condition of the organizations, condition in terms of whether the organization is making the profit or loss, what is the overall share price are increasing or decreasing. So accordingly, the investors will going to be whether to invest in this organization or not. Then suppose I will going to take any financial institution. So financial institutions are interested in that whether the organization is capable enough, whatever the money as a financial institution they have lent to the respective organization. So whether that they are capable enough to repay or not. So they are interested in that solvency position or liquidity position. Same way I will considering as a supplier. So supplier are also very much interested in that whether the organization is capable enough to repay the amount or not. So different users have the different perspectives. So in simple terms, when I'm quoting this accounting terms, so it is a continuous process from the organization point of view, means identifying, recording, classifying, summarizing, interpreting, and communicating that information to the respective users. Okay, just like I'm giving the simple examples, like any startup is there. So in that, they does not have any provisions for publishing the annual report. But yes, when we go for the company, so yes, company as per the company of 2013, they all every company need to publish the annual report, and in annual report they have to mention each and everything. Okay, so this is all about the accounting meaning. Now, what is the need of accounting? As I said that different users have the different needs for their and how they are interpreting the information. It's all perspectives. But the need of accounting I am mentioning from the organization point of view. So systematic recording of the transactions means whatever the transaction happened throughout the day, throughout the month, like whether it's relevant with the purchase, whether it's relevant with the sales, whether it's relevant with the paying the salary, with paying the rents, paying the tax to the government, means throughout the day, throughout the month, different types of transaction will be going to be happen. So yes, if organization is not going to maintain the records, then definitely it will create the lots of problems for the organization to whether which transaction is relevant to the organization. Next is about determination of profit. Yes, if we organization have the information about all the transactions, then yes, they can determine that when at the end of the uh, quarter or at the end of the half year or at the end of the year, when they are continuously making the cost and revenue, then they can come to know that whether the organization is earning the profit or loss. Then preparation of tax returns. Yes, what is the profit or loss? Accordingly, they are liable to pay the tax. Okay. Then next is about providing necessary information to the financial institutions. Yes, the financial institutions are measured mainly for the organization point of view are the lenders, and lenders are interested in that what is the overall activity are going on in the organization. They are giving the finance to the organization. So, but obviously, they will their perspective is that the organization is capable enough. What is the status of the organization? Whether the sales is stable, whether the overall profit is going up, whether what is the company's future plan? Whether company are going for the expansion or whether company are thinking for the diversification of their business. So this is the some of the points which are keep in mind by the financial institutions, and from that perspective organization will going to create that information so which will satisfy the need of the financial institution. And yes, the financial institution will go continuously with the flow of finance to the organ means providing the flow of finance to the organization. Next is about the deficit of financial position. Now when we're going to discuss about the balance sheet, so at the time we will consider this point about the financial position. But yes, what do you understand about the financial position? Financial position in terms of on a particular date, what is the overall assets, liability, and capital available to the organization on a particular date. So that information will be going to be reflect through this accounting and through the financial statement. Next is about effective control over the business. Simple, just I'm giving the one example that if we are preparing the budget, like what will be the we will go with the reverse. Like company is making the self budget. Accordingly, they will go for the production budget. Accordingly, they will go for the purchase budget. Okay. Now in budget, they have specified that at what time they have to purchase, at what time they have to produce, and at what time they have to sell the respective raw material as well as the finished goods to the customer or to the wholesalers or to the retailers. But if they are not in a miss simple, I'm giving the one another example. If in a I would like to go Ahmedabad or Delhi, my route is fixed, but and my speed is also fixed well in advance. But due to some unavoidable circumstances, suppose my I'm going through a car in between in the route, my car is having some mechanical issues, and due to that reason, my car cannot reach at predetermined time at Delhi or Ahmedabad. So I have to continuously analyze that what is the situation is going on, and accordingly I have to plan my next activity. So yes, whether if mechanical issue well in advance, I'm I'm come to know that yes, definitely the mechanical problem will come. So whether I'm ready with the plan two, if yes, then definitely the plan will going very smoothly. But yes, if I'm not come across with any plan two, then but obviously there are so many kinds of problems will definitely come. And yes, some are the some are the issues or problems, yeah, some miss person can solve. Some are the issues he or she cannot solve. Like just I'm giving the simple example. Like recently, the Tokte cyclone came. Yes, it is out of control for any person. He cannot control. So yes, here the same thing. I'm correlating with the business. If whatever the target uh, decided by the organization, if they are doing continuously work on it and they are controlling that thing, then definitely they can means they can solve the problems and they can work effectively. But yes, if suppose the controlling point are not there, then but obviously they cannot uh, find any solutions, and then again the problem will continuously there. But yes, if organization having the controlling point who are continuously monitoring the all the like simply I'm giving you an example like purchase production and sales activity, they are continuously reviewing all the situation, and accordingly if they will find any problems, then they should have to they have to come out with some remedies or solutions, and then yes, they can uh, solve out this problem. Okay, next is about providing information to interested parties. As I said that stakeholders means who are directly or indirectly associated with the organization, and to them the organization will provide the information of the organization. Just who are the interested in the overall organization performance, like like owners, management, then investors, employee, customers, government, then some environmentalists, some researchers. So these are the different stakeholders. Their use are different, their perspective are different, the need is different. So once organization is providing the information, so accordingly, the respective stakeholders will going to be interpret or they will identify their needed points in the financial statement, and then they will going to be interpret that information by own. Okay, so this is about the some of the major points about the need of accounting. Okay, uh, next is about this the accounting concept. So as I see, as science is based upon the certain rules and regulations, so same way accounting is also the base on accounting concept. On that basis, the accountant will going to be prepare the accounting books. Okay, nowadays I'm not will not going to say books. Yes, there are so many persons yet are maintaining the books, but mostly they are preferring accounting. There are so many accounting softwares are available, applications are available. So accordingly they are preparing their account accordingly. But yes, when I'm talking about accounting concept, so first concept says about entity. Now the entity says that whenever the accountant will going to be prepare the accounting, so account of his business, so whose account he or she will going to be maintained? Can anyone tell me? Because some interaction is also I am expecting from the participant. If you are not aware about, I will going to in detail. Can any participants can tell me? Yes. Yes. Any participant can. Yes. Okay. Uh, this concept simply says that separate business entity concept. Means business and business owner both are separate entity. So when accountant are maintaining the accounts, so he or she will going to be maintain the record of business, not his owner. Just simply, I'm giving one simple example that as a business owner, I am giving the capital to my business. So it is considering as a liability from the business perspective, and in the future the business have to repay that money to the business owners. So this is the simply here the simply I will say that separate business entity concept says business and business owner both are separate, and account will be going to be maintained in the books of business, not in the books of its owner. Okay. Next is about money measurement concept. Money measurement concept simply says that whatever the account will be going to be maintained in the books of accounts, so it should be in terms of money. Okay, not in terms of like a quantity. Like suppose organization has purchased land, building, furniture, AC, then having the plant and machinery, then having the raw material. So that should be not in the terms of its quantity. Like suppose organization have 5 AC, 5 chair, 5 computer, company has the land of 5 acre, or company having the machinery of so for the production purpose. Not only that, but only and only that whatever the assets uh, which I have quoted, which should be in terms of money that organization should have to uh, maintain in the books of accounts. Next is about periodicity. That means that concept says that whatever the account maintained by the organization, so that should be specific time period. Like as I said that mostly all the organization are preferring the counting period from 1st April to 31st March. Okay, so why such time period is that? Means for that such time period, organization can come to know what is the profit or loss. At least one organization can understand the one operating cycle of the organization, and through that they can come also experience that what are the ups and downs come throughout the years, and accordingly they will going to be manage their future planning. Okay, next is about accrual concept. So basically the accountant maintaining the account, uh, just three way I'm just highlighting that in the organization two types of transaction happen. One is cash and another is a credit transaction. When organization is maintaining the account only and only the cash basis, so but obviously at the time what comes they are maintaining, what goes they are maintaining. But yes, when credit transaction happens, so at that time, what should be its occurrence? When the transaction should have to write. So that concept just come across with the accrual concept. Means for that, just I'm highlighting one simple line that organization is making the profit. It does not have its sufficient cash. मीन्स कंपनी प्रॉफिट कर रही है, उसका मतलब ये नहीं है कि कंपनी उसके पास sufficient cash है. Why I'm just giving one simple example here. Like suppose we are going to prefer the financial year 2021. One simple transaction happen in the organization on a 1st January 2020. And the credit period which allowed by the organization is suppose 4 months. So now after the end of the 4 months, the respective uh, amount will be going to be released. So it will be going to be suppose released on 21st uh, sorry, 1st May 2021. Transaction happen on 1st April 2000, 1st January 21. Financial year I am taking 2021. And so, and my financial year is first start from 1st April 2020 to 31st March 2021. Transaction happen on 1st January 2021. Transaction is credit period is 4 months. So after the end of the 4 months, means 1st May 2021, the cash will be going to be released. Okay. So when organization is maintaining the account as per the accrual accounting system, so in which financial year the transaction will be going to be, they have to take, because actually cash they will going to be received on a 1st May 2021. So yes, but the actual transaction happened and the goods already delivered to the customers on a 1st January 2021. So it will be considering the transaction for the year to 2020 to 2021, and it will be going to be recorded in that year, not in the year 2021 2022. Okay, so this is just a simple concept says that it is measured mainly relating with the accrual concept, that organization is making the profit. It does not mean that it having the sufficient cash. Okay, because yes, organization is having the doing the transaction on credit basis. So, but obviously uh, the cash will be going to be released but after the end of the credit period. Next is about matching concept. Periodic matching is means organization have to match periodically its cost and revenue, and through that they will come to know that whether the organization is earning a profit or loss. No, next about going concern concept, that's not a single organization is come across is starting the business like just simply like कि भाई मैंने आज कोई एक बिजनेस स्टार्ट किया है, तो आज के दिन या एक महीने के बाद या एक वीक के बाद वो बिजनेस कंप्लीट हो जाएगा. Not that with not that intention, the organization will be going to be start his or her business. He thinks that yes, my business will grow year on year, and yes, this organization will going to be on something from this, they will get good return from that business. Okay, next is about cost. So yes, whenever the organization, whatever the assets or organization will going to be purchased, so it should be recorded as per its historic. This is about historic cost concept. So whatever the actual cost should be mentioned in the books of account, not it's like a market value. Okay, like then realization concept, when actually it will be realized at that time, the transaction should be going to be recorded. Next is about dual aspect concept. Dual aspect concept says that whatever the transaction will be going to be happen in the organization, so it's having the two effect. Okay, so accordingly, the organization will going to be maintain the transaction. For that, one simply one equation is that asset is equal to liability plus equity. So, like example made there around, okay, as a business owner, I am providing the cash rupees 50,000 rupees to XYZ enterprise. Okay, so for accountant will definitely going to be maintain the record from the XYZ enterprise point of view. So how he will see the transaction. So yes, this 50,000 rupees given by the business owners to XYZ. So this 50,000 rupees is the liability for the XYZ, because this 50,000 rupees in the future XYZ enterprise need to repay to the organization. And this simultaneously for XYZ enterprise, this 50,000 rupees is what? Yes. So it is considering as a asset. So the accounting equation is here is already same, and the same amount you will observe this 50 sorry, this 50,000 rupees. Definitely the here also, if someone will be going to be asked the question, sir, why the equation is each and every statement having the equal total, like when we considering the income statement, when we're going to discuss the balance sheet, when we going to be discuss the cash flow statement. So why the amount is the same? So amount is same due to this dual aspect concept. Means whatever the transaction will be going to be happen, so it's having the two effect. Now, next is about conservatism. Conservatism, simply I will say that never organization will be expecting the profit. Always organization is expecting the loss. With that concept, they are going to be record the transaction. Next is about the consistency. So consistency in terms of what? Means whatever the rules and regulations given in the as per the accounting, uh, as per their past record or as per the company, as per the company act. So they should have to come with the same with the same policy. Otherwise, what will going to be happen? Just simply, I'm giving the example that for calculating the depreciation, two methods are there. Two methods are there. Suppose straight line method and written down value method. Means when or if the accountant will going to be calculate the depreciation on any particular asset, if he is continuously going with the only and only straight line method, then yes, the amount will be not vary. But yes, if suppose first year he will apply the straight line method, and in the second year, if suppose he will apply the written down value method, again the third year they will apply the straight line method, then fourth year they will apply the written down value method, then but obviously the question will definitely will be going to be arise, whatever the result of organization will going to be represent to any to its stakeholders. So what obviously stakeholder, the chances of confusion or chances of query will definitely arise in the minds of stakeholders. Why the company is continuously changing the policy? Is there any specific reason? Like suppose, so what kind of, if suppose, yes, it is provision is there that if company would like to change the policy, then company need to give the justification for that, and accordingly the company will going to be change this policy. When you will see the annual report, so you will find the footnotes. So in footnotes, you will going to find that what if suppose company is making the changes in any policy, so the company have to give the justification for the same. So same way, if any organization is making the changes, so they have to give the justification for that. Next is about the materiality. Yes, materiality in terms of simply suppose I am in the I am in the uh, I am in the business of computer selling and computer purchase. Okay, so this is my core activity. Okay, same way, suppose for that I have purchased stationary item. Stationary item, suppose like your pen, pencil, or suppose any paper ream are there. So come some suppose I need some marker pen. So I am purchasing, but when I am comparing the value of stationary item and item of a computer or item with my asset like a AC or furniture or my land or building. So at that time, the value of stationary items are very less. So I, as a organization, I have to understand कि किसको कितना वेटेज देना चाहिए, उस हिसाब से ऑर्गेनाइजेशन उस हर एक एसेट्स को या स्टॉक को treatment करेंगे. Okay, like just simply I'm giving the example, like I am purchasing the pen, so it is considering as stationary expenses. पेन को मैं मेरे assets balance sheet में नहीं दिखा सकता. What is balance sheet later on we will going to discuss, but it is not my asset. It is a one consumable item which will be going to be consumed within a short span of time. So it will be considering as a expense, not as a asset. Okay, so just giving the treatment, किसको कितना वेटेज देना है, कितना इंपॉर्टेंस देना है, उसकी वैल्यू के हिसाब से आपको उसको ट्रीटमेंट देनी है. जस्ट दिस इज ऑल अबाउट द अकाउंटिंग कंसेप्ट, एंड ऑन दैट बेसिस द अकाउंट आर गोइंग टू बी मेंटेन्ड बाय द अकाउंटेंट. In this, anyone have any doubt or query, you can ask. Otherwise, we can go for the next slide. Yes, anyone have any doubt or query? Okay, we go for the next slide. Now, types of accounting. Now, mainly here I'm highlighting the three major types of accounting are there: financial accounting, management accounting, and cost accounting. Now, what do you mean by financial accounting? So simply from simple transaction to preparing the balance sheet or preparing the financial statement, each and every step come under the financial accounting. Now, what do you mean by management accounting? The word itself indicating. What do you mean by management accounting? Management accounting is just simply the accounting which is help to the management. For management accounting, no any specific format is specified. As per the need of the management, they will collect the data, analyze the data, and interpret that data accordingly their need. Okay, but yes, when we see about the financial accounting, so financial accounting as per the is for any public limited companies is there. So yes, for them specific format is there, and accordingly they will going to be prepare the statements. When we are talking about the cost accounting, so yes, the cost accounting as it will be help to the organization to determine, especially determination of the cost. Also, it will be help to the organization for the cost control and cost reduction. So different these are the different accounting is there. Its views are different from the its stakeholders point of view. Yes, yeah, then yes, there are emerging accounting areas are also coming, like social accounting, human resource accounting, forensic accounting, okay, project accounting. So these are the different new emerging aspects of accounting are also coming. But mainly when we see, so mainly it is these are the financial management and cost accounting which is help to the overall organization for its routine operation. Okay. Next is about accounting cycles. As I said that here I will going to mainly focus on the financial accounting, because financial statement or the organization will prepare on the basis of this transaction point of view. So simply, first is identifying transaction. Suppose in the organization, throughout the day, different types of transaction will be going to be happen. So which are relevant to the organization point of view. I'm just simply giving from the organization point of view. So just identify the transaction. Next step will be recording in the journal. Mix the journal is one books of accounting, which will be helped to in that the accountant will be going to be record each and every day transaction of his organization. Next, once the journal entry is complete in the books of journal, then that will be posted. Means one term is that posting is transferring the entry from journal to ledger. It's called posting. So in that post in the books of ledger, the separate account will be going to be prepared by the accountant. Like just simply, I'm giving the example like a sales account is there, purchase account is there, sales return account is there, purchase return account is there, cash account is there. Then if any customers account is there, then salary account is there, wages account is there, rent account is there, depreciation account is there. So different means which are the account relevant recorded in the books of journal, that all separate account will be going to be created in the books of ledger, and whatever the entry happened uh, throughout the year, it will be going to be posted in the respective account. And at the end of the year, the respective account will be going to be balanced, whether it's a credit balance or debit balance. In that, I will not going to be discuss more. But yes, each and every account balance will be going to be uh, uh, done by the organization, whether it's a credit or debit balance, and then on that basis, the organization will be going to be prepare the next book, next statement, that is a trial balance. Now, trial balance is just a statement which is unadjusted. Why it is unadjusted? Means throughout the year, whatever the items yet not given, or by mistake some wrong treatment is already given. So yet it is not considering by the organization. So it is unadjusted. Means वो treatment अभी organization ने नहीं दिए. Just simply मान लो कि salary कंपनी ने salary पे करना रह गई है, या डेप्रिसिएशन का इफेक्ट देना रह गया है, या कोई कैपिटल लिया है तो उसके ऊपर इंटरेस्ट कैलकुलेशन करना रह गया है, उसकी ट्रीटमेंट नहीं दी है, देन इट विल बी गोइंग टू बी giving the organization will be going to be give the treatment accordingly. That is why it's called unadjusted balance sheet. Now, in trial balance, all the assets, all the liability, all the expense, all the revenues account will be going to be recorded in a trial balance. On the basis of trial balance, the organization will going to be prepare the financial statement. Now, next step is 5 adjusted entries. Just a minute. Now, next is about adjusted entry. As I said that, suppose organization ने salary pay की है, but वो record करना रह गया है. Next is suppose organization has already paid the premium of their assets, but yet the organization have not recorded that thing in the books of account. Suppose organization by mistake forget to record the forget about calculating the depreciation on the asset, but when they will come to know through their internal audit, they will come to know about that thing, and simply they will now giving the treatment accordingly, and then that is why it's called adjusted entry. Means they will going to do the adjustment in the books of account. Then after they will going to be prepare the adjusted trial balance, and on the basis of adjusted trial balance, they will now finally preparing the financial statement like income statement, balance sheet, or and the next is a cash flow statement, and last one is close the books. Means one accounting period means like a one financial year, means 1st April to 31st March. One financial year is completed, and again the next financial year will be going to be started, and then the accounting cycle is continuously moving and moving. So this is about the accounting cycle from simple transaction to preparing the financial statement. Again, I am just repeating: recording the transaction in the books of journal, transferring in the ledger, preparing the trial balance, which is unadjusted, giving the treatment in the different entries, preparing the adjusted trial balance, financial statement. On the basis of trial balance, the organization is going to be prepare the financial statement, and then accordingly they will close all the books. So this is about the one accounting cycle. Now, types of financial statement. Now, the major point which is coming relevant with this topic is that financial statement, how to understand the financial statement. Okay, so one by one we will going to discuss. As I said, first is a profit and loss account, or it's also known as the income statement. Next is about the balance sheet, and the third is about cash flow statement. So these are the major, mainly three financial statement organization have to prepare. Okay, one by one we will going to now see about the respective financial statement. Now, first is about profit and loss account or income statement. The word itself indicating its meaning that the statement with giving the information to the organization about the profit and loss of the organization. It is considering as a प्रॉफिट एंड लॉस एंड इनकम स्टेटमेंट इस वो जो स्टेटमेंट ऑर्गेनाइजेशन का प्रॉफिट दिखा रहा है या लॉस दिखा रहा है एंड यस हियर द ऑर्गेनाइजेशन core activity and some non-core activity. Now, when I will say that what do you mean by core activity or mainly operating activity or non-operating activity? So its result will you can going to be see in the profit and loss account or in a income statement. कि ऑर्गेनाइजेशन की जो रूटीन एक्टिविटीज है कि जिससे लाइक परचेज सेलिंग देन रूटीन एक्सपेंसेस है वो सभी रूटीन एक्सपेंसेस you will going to see in a profit and loss account. We will also see through Excel sheet, and then we will identify the all the activities. Then it's also show whether the company is making profit or loss for the specified time period. One point I would like to highlight over here is that the profit and loss account organization is preparing for the particular year. Means throughout the year, whatever the activity carried out by the organization. So what its result? So that result will be going to be reflected through profit and loss account. Okay, so it also it shows measure the profit and loss of the organization. Now next is about the balance sheet. Now balance sheet, the word itself indicating the balance in terms of what? So balance in terms of assets is equal to, as earlier in the concept of dual aspect concept, as I have discussed, that dual aspect concept is asset is equal to liability plus equity. वो जो मैंने आपको पहले भी डिस्कस किया कि as a business owner I am giving the 50,000 rupees capital to my business. So for I as a business organization, when accountant will going to be maintain the books, so he will see the from the business perspective point of view कि भाई ऑर्गेनाइजेशन को 50,000 रुपीज मिले हैं तो वो फ्यूचर में ऑर्गेनाइजेशन को रीपे भी करने हैं. सेम वे वो 50,000 रुपीज अभी ऑर्गेनाइजेशन के पास क्या है, कैश अवेलेबिलिटी है. सो इन दैट वे द एसेट इज इक्वल, एसेट इज मींस व्हाट, 50,000 कैश ऑर्गेनाइजेशन के पास है और 50,000 लायबिलिटी इन टर्म्स ऑफ व्हाट कि भाई वो 50,000 रुपीज फ्यूचर में वो स्पेसिफाइड टाइम पीरियड है तो वो टाइम पीरियड में ऑर्गेनाइजेशन को मनी रीपे करनी है, whether it's after the end of the 1 year or 2 year or whatever the terms decided by the organization with the particular financial, with the owners or with the any financial institution. Okay, so balance sheet is the financial statement of a company which includes what is assets, liability, equity capital, total debt of the organization at a point in a time. Means it is yes. Now the difference between here I am just like giving the basic difference of income statement and balance sheet is that income statement providing the information about throughout the year whatever the activity happened and what its result come in terms of profit or loss, whereas balance sheet is giving the information about financial position on a particular date. I am giving the again repeating the word particular date in terms of कि उस दिन पे ऑर्गेनाइजेशन की एसेट्स कितनी थी, लायबिलिटी कितनी थी, तो वो चीज आपको जब देखनी है तो आपको जब भी आप कोई भी एनुअल रिपोर्ट भी देखोगे सो बैलेंस शीट इज फॉर व्हाट, बैलेंस शीट फॉर द पर्टिकुलर डेट लाइक 31st March 2020 या 31st March 2021. तो बैलेंस शीट आपकी पर्टिकुलर डेट पे होगी, वो पर्टिकुलर डेट पे ऑर्गेनाइजेशन की एसेट्स कितनी है, लायबिलिटी है, वो रिफ्लेक्ट कराएगी. दैट इज व्हाई इट्स इंक्लूड एसेट्स ऑन वन साइड एंड लायबिलिटी ऑन द अदर साइड. you will see now you will see the format balance sheet of balance sheet of any company or balance sheet of any organization. So that format is different. So one side you will find the assets, one side you will find the liability. So accordingly, you can identify the financial position or financial condition of the organization. And that is why one very good word here is that balance sheet is more like a snapshot of a financial position of a company at a specified time. Means on a particular, just like आज अभी मेरा कोई snapshot ले रहा है, throughout day मेरा look change हो रहेगा, but suppose my looks anyone would like to take. So at this moment, what is my look? It might be, suppose I am right now I am praised. Suppose at the end at 5 or 5:30. So it might be possible some work stress will be there through my face. It may be changed. But yes, snapshot is for that particular time period. So on a particular date, what is the asset available to the organization? Which are the liability organization have to pay, whether it's a long-term liability, whether it's a short-term liability. So on a particular time on a particular date, what is the financial position or condition of the organization? If that thing I would like to evaluate, so for that I have to check balance sheet. I will later on we will also see one by one all the statement. So usually it's a calculated quarterly, 6 month or 1 year. So balance sheet has the main two heads, assets and liability. Now, what do you mean by assets and liability? So assets means what organization own and what the liability what owe to. means मान लो कि सपोज मैं कोई भी एक स्टार्टअप स्टार्ट कर रहा हूँ, एक स्टार्टअप इन टर्म्स ऑफ लाइक डेयरी फार्मिंग में स्टार्ट कर रहा हूँ. डेयरी फार्मिंग बिजनेस में मैं कौन कौन सी मेरी एसेट्स होगी, कौन कौन सी मेरी लाइबिलिटी होगी. सपोज आई एम using my own saving of rupees 50,000 rupees. I am taking the loan from my friends, from relatives. Again, I am going approaching if any venture capitalist. I will going to approach any financial institution. For them, I am taking the loan. Simultaneously, I am also applying my own saving, in the business. But again, me and my business both are separate. I will going to be maintain the accounts of my business, not my own. Okay, so when I will see from the business perspective, so yes, mere ko miss I have to pay the money. Miss my business have to pay the money to whom? To me, to my friends, to my relatives, to my partners, to my miss जिससे मैंने बिजनेस ने लोन लिया है, वो फाइनेंशियल इंस्टीट्यूशन को, कोई वेंचर कैपिटल से अप्रोच किया है तो उनको, वो सभी को मनी पे करनी है. सो दैट इज कंसिडरिंग एज अ लायबिलिटी. नाउ नेक्स्ट आई विल सी द एसेट. जो भी पैसे मेरे पास आए हैं उसमें से मैंने मान लो कि बफेलो परचेज किया या काउ परचेज किया. आई हैव इंस्टॉल्ड द रेडीमेड मशीनरी फॉर द, आई हैव परचेज रेडीमेड मिल्किंग मशीन. I have purchased the land. I have constructed one small building. I have shades. Okay. I have purchased the instruments which are needed for the routine activity. Okay. So that considering all my assets, जो मेरी खुद के पास है और जो liability है मेरे को पे करनी है, वो short term है या long term है. Okay. So this is about the assets and liability. Now next is about cash flow statement. Now here I would like to highlight 2 points. One is cash budget and the cash flow statement. Now when you heard the one term cash flow, means cash का inflow हो या outflow हो. Inflow means when cash is coming in the organization, or outflow means cash is going from the organization. So from that perspective, when organization see what is the cash inflow, what is the cash outflow, what is the cash at the opening, what is the cash balance at the closing. So that will be going to be reflect through cash flow statement. So the purpose of cash flow statement is providing a detailed picture of what happened to business, especially here cash flow statement, because its name is there, it is preparing through only and only cash basis transaction. It will considering only cash basis transaction. not credit, because it will be not considering here. Yes, later on when cash will come, so it will definitely will consider it, but कैश का इनफ्लो कितना है, कैश का आउटफ्लो कितना है, वो चीज हमको जाननी है. Then I have to see the cash flow statement. It's what happened to a business cash during a specified time period throughout the year, so known as the accounting period, and it demonstrates an organization ability to operate in short term and long term base, how much cash is flowing into and out of the business. इस कितने हर एक activities means in cash flow statement we will also see the which are the now we will going to moving the excel sheet in detail. We will discuss the each and every financial statement, how to read the financial statement and how to interpret that information. Now this is visible to all of you. It is visible to all of you. Hello.
Yes, sir. Yes, sir. It is visible, sir.
Okay. Now, first we have discussed about the profit and loss account, or it's also known as a income statement for the year ended 31st March 2021, which I have prepared tentatively. So, as I said that in the organization throughout the year, different types of activity will be going to be happen. It will be going to be recorded, and it will be balanced on a particular date, and that balance will be going to be transferred in a trial balance when organization is preparing the adjusted trial balance finally. So respective accounts having what is the balance. So here, just like for information is that sales. So yes, the sales throughout the year, what is the income generated by the organization through sales? So what is the sales balance in the trial balance? So like suppose here the information about 10 lakh rupees. So 10 lakh rupees amount generated by the organization through sales. We can also call as a sales revenue, sales turnover. Okay, that also we can see here. Next is about sales return. So yes, throughout the organization, it might be possible that whatever the goods supplied by the organization, it may be rejected by some defects or due to some damage. So it will be taken by the organization as a return. And then what is the overall net sales done by the organization? So like suppose 9,65,000 is the net sales. Then next is about cost of goods sold. Now what cost of goods sold means whatever the cost incurred for the selling the goods. So it will be considering as a cost of goods sold. So for that organization have purchased, suppose we have the opening stock. If any, suppose if new business is there, in that case, they does not have the opening stock. But if suppose the organization is new, then what obviously, if suppose the organization is old, then but obviously they having some last year closing stock. So it will be considering as a next year opening stock. Then it will be going to be added purchase. Yes, throughout the year, whatever the purchase done by the organization, so it will be going to be added like 3,50,000 materials purchased by the organization. As in the sales we have discussed, sales return. So same way, we as a customer, we we have our own other suppliers. We will, or yes, as an organization, we have another suppliers. So as an organization, as a customer, will be sent back that goods to suppliers. So that considering as a purchase return. So net purchase is 3,05,000. Then some purchase related expenses like rent, transportation charges is there, some tax duties are there, which will be going to be paid by the organization. So it will be going to be recorded here. This 50 like purchase related expenses are 50,000. So closing stock at the end of the year, suppose closing stock is 55,000. Okay, whatever the sales done by the organization, and At the end of the year, closing stock is 55,000. So cost of goods means opening stock plus purchase related expenses minus closing stock. So it will be cost of goods sold is 3,85,000. Yes, organization have sell 9,65,000 good, making the sales turnover, and for that selling the goods, cost of goods sold is 3,85,000. So net sales minus cost of goods sold. So gross profit earned by the organization is 5,80,000 rupees. Okay. Now next is about, this is I can say direct activity. Now indirect activities. Now indirect activity in terms of what? कि भाई 5,80,000 रुपीज कंपनी ने ग्रोस प्रॉफिट अर्न किया है. Now throughout the year, different activities carried out by the organization, it will be considered as a routine expenses. Okay, operating expenses, like these are the like having the heading of I have bifurcated with the heading like office and administrative expenses. In that, organization is paying the salary, rent, printing and stationery expenses, postage expenses, legal charges, insurance premium. So total office and administrative expenses in the organization is suppose 19,000. So next is about selling and distribution expenses, which are the happen routine, which is routine or operating expenses. So showroom expenses like 2,500, advertisement expenses 3,500, commission paid to the salesman, salesmen 3,000, bad debt. Now bad debt in terms of what? This sometimes what is going to be happen, the organization selling the goods on credit basis, some customers are not paying, just like you might be have heard the term NPA, not performing assets, from bank perspective. तो NPA क्या है कि जिसको लोन दिया है और वो रीपे नहीं कर रहा है, तो वो बैंक कंसिडर कर रही है NPA. सेम वे ऑर्गेनाइजेशन ने क्रेडिट पे सेल्स किया है, बट वो कस्टमर से उनको पैसे नहीं मिल रही है, so it's considered as a bad debt. So it is expense from the organization point of view. Then provision for doubtful debts. Again, the organization well in advance creating the provision, looking to the past experience from the customers. Organization is going to create some provision. On an average 5,000 or 2,000 or 3,000 organization को doubtful debts हो गई होगा. Well in advance, organization is creating the provision for that. Here in this case, like 5,000. Then go down rent. It's a 2,500. So total selling and distribution expenses are 29,000. Next is about depreciation and maintenance expenses. Means whatever the assets available to the organization. So due to wear and tear and with the utilization, also due to some obsolescence, or its value of the assets will be decreased. So as I say that organization will depreciate the assets. Like here in this case, the depreciation is amount is taken 10,000. Then financial expenses, as the word itself indicating that organization have some taken the loan, or organization is receiving the discount from any banks on paying the interest like that. So interest on loan is suppose 15,000 is there. Discount allowed is 5,000 is there. So total financial expense is 20,000. Now total expenses, financial expenses, depreciation expenses, selling and distribution expenses, office and administrative expenses, total operating expenses is considering as like 68,000. So total gross profit is 5,80,000 minus operating expenses is 68,000. So now net profit from the operation is 5,12,000. So it is considering as a net profit, which is considering by the organization 5,12,000. Now next is other income, which is not a routine income. Organization is supposed to selling and trading of the selling and trading, but another assets also organization have acquired, and organization have some excess capital. So at that time, organization is suppose giving on a some organization is lending, or some organization is investing in some stock, or some organization is giving the money to some parties. So accordingly, and from that from that sources organization is getting the income. Okay, so here organization is suppose having the land, and now organization is providing the land on a rent basis. So rent is what is the income. Dividend, suppose organization have invested that money on a share, and they are getting the good amount of uh, return in terms of डिविडेंड. कोई कंपनी में इन्वेस्टमेंट किया है और वो कंपनी अच्छा डिविडेंड प्रोवाइड कर रही है. डिविडेंड इज व्हाट? डिविडेंड सिंपली कोई कंपनी प्रॉफिट कर रही है तो प्रॉफिट का शेयर उसके ओनर्स को दे रही है. तो एज ए ऑर्गेनाइजेशन हैव इन्वेस्टेड on any company's share, and the organization earning the dividend. Discount received means what they suppose organization is receiving the discount from the supplier. Okay, interest on loan. Suppose organization have given the loan to its to some parties, and from that they are giving the interest to the organization. So interest on loan and profit on sale of assets. Suppose the new organization is there, then in that case this item will be not come. But suppose organization is 5 or 10 year older is there, it might be possible that some of the assets organization would like to sell. Like suppose company ने अपना फर्नीचर या कंप्यूटर या एसी या कोई मशीनरी पुरानी हो गई है तो वो सेल कर दिया, तो उसमें से जो रेवेन्यू जनरेट होगा that also organization have to show in a profit and loss account. So profit on sale of assets, that is 15,000 suppose. So total other income is 50,000. So now here net profit is 5,62,000. This 5,12,000 is the net profit from the operation which is generating from the routine activity, core activity. And these are 50,000 is a what? Non-core activity, which is not routine income of the organization. So 5,62,000 is the net profit earned by the organization from the operation of the business. Now, in this, anyone have any query or doubt, you can ask. Okay. Next is about balance sheet. As we have said, that organization have the two sides. One is liability and another is the asset. Now, from that another perspective, you will also when you see कि पैसे कहाँ से आ रहे हैं और पैसे का यूटिलाइजेशन कर रहा है, मीन्स sources of finance and application of finance. From that perspective, also you can see here कि भाई कंपनी ने किस किस जगह से पैसे क्रिएट किए हैं और किस किस जगह पे वो पैसे का एप्लीकेशन किया है. सपोज हियर from liability perspective, see why I'm saying it's a liability, because that organization have to pay. And why it is asset, which is organization have its own, कि जो organization है खुद का है अभी. And that is why see the total of the both the side is equal. Asset is equal to liability plus equity. Okay, so this is the sources of finance. So liability में भी organization में जो क्रिएट किया कैपिटल, किस किस जगह से कंपनी ने कैपिटल क्रिएट किया है. सपोज ओनर्स इज ओन कैपिटल, इज द फ्रेंड्स, रिलेटिव्स, वेंचर कैपिटल से पैसे लिए हैं. प्रॉफिट, नाउ यस हियर प्रॉफिट इज अ लायबिलिटी. व्हाई? बिकॉज organization does not anything. Organization have taken the money from its owners, so it have to repay. Okay, and that is why the profit is liability. Now another thing is that long-term liability is there. Like suppose organization have taken the long-term loan, like for the 5-year or 10-year loan from the any financial institution. So bank loan is a 1,50,000. Next is about current liability. So why it's a current and long-term liability? The two terms is there: long-term liability and current liability. So the long-term liabilities which is having the which need to pay by the organization more than 1 year, like after the 5-year or 10-year. But current liability is considering as a which need to pay organization within the 1 year or less than 1 year. Okay, just like a creditor. Means creditor here another term is there also supplier. कि जो सप्लायर है उनको ऑर्गेनाइजेशन को मनी पे करनी है. बिल्स पेएबल कि जो बिल्स रिसीव किया है ऑर्गेनाइजेशन ने, उसको पे करना है. So it is considered as bills payable. That is amount 50,000. Bank overdraft. Suppose organization have taken the bank overdraft from the bank. So here amount is 25,000. So we need to pay by the organization to uh, bank. Cash credit facility available by the organization from the bank. So also organization have to pay that amount to banks. Outstanding expenses. Yet there are so many expenses. Like suppose organization yet need to pay the salary, yet need to pay the rent, yet need to pay the interest. So that are considered as outstanding expenses from the organization perspective, and which is considered as a liability. Next is about pre-received income, or it's also known as income received in advance. Okay, so जो इनकम ऑर्गेनाइजेशन को एडवांस में मिल गई है, कि मान लो कि कोई किसी से ऑर्गेनाइजेशन को इंटरेस्ट है, वो एडवांस में मिल गया है, या ऑर्गेनाइजेशन को suppose organization has received the money from their debtors in advance. बराबर से कस्टमर्स को पे, कस्टमर्स लेट पे करेंगे, बट कस्टमर्स को जल्दी, कस्टमर से जल्दी रिसीव करना है, तो क्या करेंगे? सो दैट इज कंसिडर्ड एज अ प्री रिसीव्ड इनकम फ्रॉम द ऑर्गेनाइजेशन पर्सपेक्टिव. This is about current liability. So when we see the simply the balance sheet, so one is liability side. It's also considering as a sources of fund, कि जहां से भी ऑर्गेनाइजेशन ने फंड रेज किया है और वो फंड का एप्लीकेशन किस जगह पे किया है. नाउ वी सी द एप्लीकेशन ऑफ दिस फंड. सो एप्लीकेशन इन टर्म्स ऑफ हियर ऑर्गेनाइजेशन हैव परचेज्ड द लैंड, organization have constructed the building, organization have furniture, organization have plant and machinery, organization have some goodwill, long-term loans. Organization have given the long-term loan to some parties or some other organization. Okay, so it is considered as a fixed assets from the organization. Okay, on fixed assets the organization have to calculate the depreciation, and these are the assets are not in a nature in that कि उसका वैल्यू एक ही साल में खत्म नहीं हो जाएगा. These assets purchased by the organization for the long term perspective, for the long term use. Okay, और उसका बेनिफिट भी ऑर्गेनाइजेशन को लॉन्ग टर्म में मिलेगा. One another line here I would like to quote here is that this is also when organization is purchasing these assets, so it is a very critical decision or organization is taken. Because why? Because it is a irreversible decision. कि आपने एक जगह पे लैंड परचेज कर ली या बिल्डिंग कंस्ट्रक्शन कर दिया, तो इट इज रिक्वायर्ड ह्यूज इन्वेस्टमेंट. इन दैट वी कैन नॉट से दैट ये लैंड परचेज कर ली है तो विद इन अ शॉर्ट स्पैन ऑफ टाइम मैं सेल कर दूंगा और उससे रेम्यूनरेटिव प्राइस मेरे को मिल जाएंगे. सेम वे बिल्डिंग, फर्नीचर, वो सभी मीन्स जो लॉन्ग टर्म और फिक्स एसेट्स है, उसमें एक ऑर्गेनाइजेशन का फ्यूचर प्लानिंग दिखना चाहिए, एंड अकॉर्डिंगली द ऑर्गेनाइजेशन विल गोइंग टू बी एक्वायर दिस फिक्स एसेट. नेक्स्ट इज अबाउट द current assets. So current asset is means what? As current liability, as I said that the liability which organization will have to pay within a 1 year or less than 1 year. Same with the current assets, कि जिसमें से ऑर्गेनाइजेशन को विद इन एक साल में या एक साल के पहले जो पैसे मिलने वाले हैं या मिल गया है, that will be considered as a current asset. So like a closing stock, which will be definitely the opening stock for the next year, and it will be going to be sell in the next financial year. Debtors means organization have sell the goods on a credit. So from that they will receive from the customers whatever the credit period allowed by the organization, whether it's a 3 year, 3 month, 4 month, 5 year, 5 months, 6 months. So accordingly it will be, the money will be going to be released on a specified time period. Next is about bills receivable. So bills receivable is considering whatever the, as I said, the bills payable जो हमारे सप्लायर को हमको पे करने थे, सेम वे ये हमको हमारे कस्टमर से रिसीवेबल रहेंगे. Prepaid expenses, organization have prepaid, like organization have prepaid rent, प्रीपेड इंश्योरेंस प्रीमियम, प्रीपेड इंटरेस्ट, ओके। तो जो जो पहले एडवांस में पे कर दिए, ओके, सो दैट विल आल्सो कंसिडर एज करंट एसेट्स, आउटस्टैंडिंग इनकम। ऑर्गेनाइजेशन को अभी मान लो कि किसी कंपनी में इन्वेस्टमेंट किया है, तो वो कंपनी में से ऑर्गेनाइजेशन को डिविडेंड मिलना बाकी है, या अभी इंटरेस्ट मिलना बाकी है, या रेंट, ऑर्गेनाइजेशन कोई एसेट्स है वो रेंट पे दिया है और वो रेंट मिलना बाकी है, सो दिस इज कंसिडरिंग एज आउटस्टैंडिंग इनकम। देन कैश एट बैंक, cash on hand, and short-term investment. So these are the some of the current assets. And when you see the both the side, total is 26 lakh 27,000. So both the side total is equal. So assets is equal to liability plus equity. Okay. तो जब भी आप कोई भी बैलेंस शीट को देखोगे, तो these are the points you have to consider कि भाई which are the sources of finance available to the organization and where the organization is making the application. Simultaneously उसका कितना परसेंटेज भी उसमें इन्वेस्टमेंट किया है, वो भी चीज उसमें देखनी चाहिए। नेक्स्ट, this is about the balance sheet. Now next statement is about cash flow statement. Now cash flow statement is also for the throughout the year. Now cash flow statement, as I said that as I said that cash flow means what is inflow and what is outflow from the organization. So that will be going to be reflected through cash flow statement. तो cash flow statement में मैं यहाँ पे आपको एक रिवर्स साइकिल के ऊपर ले जा रहा हूँ. Why we will discuss that. At the end of the year, what is the closing cash balance available to the organization? 90,000. Okay. Now here the cash flow statement I have bifurcated with the three major activity, and which are the three major activity? One is operating activity, investing activity, and financing activity. Okay, we will see with the reverse. Now what do you mean by financing activity? कि जहां से भी कंपनी ने पैसे रेज किए हैं वो फाइनेंसिंग एक्टिविटी हो रही है. तो वहां पे इनफ्लो कहां से आ रहा है कि भाई कंपनी ने, मान लो कि यहाँ पे मैंने कंपनी पर्सपेक्टिव से लिया है कि कंपनी ने शेयर इश्यू किए या डिबेंचर इश्यू किए या किसी से लॉन्ग टर्म बोरोइंग किया है, तो यहाँ पे कंपनी ने उस हिसाब से उसका कैश इनफ्लो होगा. नाउ व्हाट डू यू मीन बाय कैश आउटफ्लो हियर? कि भाई सेम वे मैंने लोन ली है तो लोन का रिपेमेंट करना पड़ेगा, लोन का प्रेफरेंस शेयर रेज किए तो प्रेफरेंस शेयर नाउ उसका रीपेमेंट करना पड़ेगा, या कंपनी है तो समटाइम्स कंपनी थिंकिंग अबाउट बायबैक ऑफ इक्विटी शेयर, सो दैट अमाउंट दे विल also going to be considered. Payment of dividend is there, so they have to pay the dividend on equity share. Payment of interest on long term borrowing. Okay, तो ये कंपनी का पेमेंट हो गया. तो यहाँ पे when I will going to see my net cash flow from the financing activity, तो मैंने हर एक जगह से कितने कैश ने पैसे रेज किए और किस किस जगह पे मैंने स्पेशली उसके पीछे आउटफ्लो हुआ. तो दैट इज व्हाट 7,25,000. So it is 75,000 is what my net cash flow from the financing activity. ये हो गया सोर्सेज कि जैसे सोर्सेज ऑफ फाइनेंस कहाँ पे था कि किस किस जगह से मेरे को पैसे मिले. नाउ नेक्स्ट एक्टिविटी इज इन्वेस्टिंग एक्टिविटी कि मेरे पास जिस जगह से पैसे आए हैं, फ्रॉम विच आर द सोर्सेज आई हैव कम द कैश. ओके, सो वेयर आई एम मेकिंग द एप्लीकेशन ऑफ इट, सपोज that is a investment in terms of like I am investing in a fixed asset. Sorry, outflow. Suppose outflow is purchase of fixed asset, that is 3,50,000, and purchase of investment, that is a 2,50,000. मैं किस कंपनी में इन्वेस्टमेंट कर रहा हूँ, वो किस कंपनी का शेयर ले रहा हूँ. ओके, नेक्स्ट है इनफ्लो. इनफ्लो फ्रॉम द इन्वेस्टिंग एक्टिविटी. ये इनफ्लो मीन्स सेल ऑफ फिक्स एसेट. मान लो कि हमारे पास जो भी कोई एसेट्स है ऑर्गेनाइजेशन की, वो ऑर्गेनाइजेशन सेल कर रही है, तो उसका जो सेल्स प्रोसीड्स होगा, इनका जो रेवेन्यू जनरेट होगा कैश में, तो वो 2,50,000 यहाँ पे सेल ऑफ इन्वेस्टमेंट, ऑर्गेनाइजेशन ने मान लो कि किसी कंपनी के शेयर परचेज किए हैं और वो सेल कर दे रहे, तो उसमें से रेवेन्यू जनरेट हुआ 75,000 इन टर्म्स ऑफ कैश। इंटरेस्ट रिसीव्ड बाय द ऑर्गेनाइजेशन, ऑर्गेनाइजेशन ने किसी को लोन दिया है और वो लोन से कंपनी का इंटरेस्ट जनरेट हो रहा है 25,000। ऑर्गेनाइजेशन किसी कंपनी में से इन्वेस्टमेंट किया और उसमें से मान लो कि डिविडेंड मिल रहा है, so this is the inflow. But when you see the structure, so at initial stage, see 6 lakh is what? Outflow. And 3,85,000 is what?
हेलो
Yes, madam.
सर, आपकी स्लाइड मूव नहीं हो रही है। आर वी ऑन द 11th स्लाइड?
No, madam, right now I'm
यहाँ पर नहीं दिखाई दे रहा सर।
just a minute.
कैश फ्लो स्टेटमेंट।
Hello.
Yes, sir. We are on 11th slide, sir.
Just a minute. Just a minute.
यस सर।
Hello. Now it is
Yes, sir. Now it's okay, sir. Now we are on different slides, sir.
Just a minute. Just a minute. Now this Excel sheet is visible.
यस सर।
Okay. So majorly the organization is highlighting, preferring what is the inflow from the investing activity and what is the outflow from the investing activity. But obviously these are the inflow which are coming from the different activities like sale of fixed assets, sale of investment, interest received, dividend received. This is the not core or routine revenue generating activity of the organization. So here 3,85,000 organization is earning from its non-operating activity, I can say that. But here when outflow is there, so but obviously for the establishment of plant and machinery, organization is definitely going to purchase the fixed asset for their operating activity purpose. So here you can see the minus result is coming because through investing activity, the outflow is more and inflow is very less. That is minus 2,15,000. कि जो भी पैसे ऑर्गेनाइजेशन में इनफ्लो हुए हैं उसका रिफ्लेक्शन यू कैन सी ये ना थ्रू वॉट एवर द इनफ्लो कमिंग फ्रॉम द फाइनेंसिंग एक्टिविटी, दैट रिजल्ट यू कैन सी इन द इन्वेस्टिंग एक्टिविटी कि जहां पे पैसे आए हैं उसका इन्वेस्टमेंट ऑर्गेनाइजेशन में किस जगह पे कर रही है, so that will be reflecting through outflow. Okay, outflow of investing activity. Next is a core activity. I can say that the operating activity of the organization means in that what is the cash sales, like here The cash sales is 3,50,000. Cash received from the debtors, cash received from the commission from commission. So 4,25,000 is the cash inflow from the operating activity, and outflow means what the cash purchase, payment to creditors, payment of cash operating expenses, payment of wages, payment of income taxes. That is 2,95,000. Okay, so net cash flow from the operating activity is 1,30,000. And yes, when we observe the cash flow statement, so if the cash flow from the operating activity is positive, so it is one of the good signs for the organization that whatever the uh, whole activity carried out by the organization, so its cash is circulating or its cash is moving. If suppose it's come in the negative, then organization have to think, because it's also required the more working capital for the organization. That is why this uh, operating activities cash net cash flow from the operating activity is very important. Why? Because if it is a positive, then we can say that yes, the cash is circulating in the business. If suppose the organization is making, there are so many credit sales and uh, the amount will be blocked, that is very difficult for the organization to to release the cash from all this activity. Okay, तो जितना भी वो कैश का सर्कुलेशन जितना ज्यादा रहेगा, it is a good sign for the organization perspective. Okay, and then now we go for the last opening cash balance, that is 1 lakh. The core net cash flow from the operating activities, that is 1,30,000. Then net cash flow from the investing activities minus 2,15,000, and net cash flow from the financing activities, that is 75,000. So closing cash balance is 90,000. So opening में कितना था, उसमें से सभी में से add किया, और at the end of the year what is the closing cash balance, and then it will become the next financial, it will be the cash balance for the next financial year. Okay, so this is about the overall cash flow statement. So we have discussed here the profit and loss account, balance sheet, and cash flow statement. These are the major three statements, and which are the one by one, the profit and loss account or income statement, giving the idea about what is the overall revenue and what is the overall expenses incurred throughout the year, and what is the result in terms of whether the organization is earning the profit or loss. Now next, when we see the balance sheet, so balance sheet is providing the information about which are the sources of the fund, which are the where is the making the organization application, what is the liability, what is the assets of the organization, and what is its proportion. Okay, and next the cash flow statement giving the idea about what is the overall cash flow from the different activities, whether it's investing, financing, investing and financing activity. तो उसमें से कितना inflow हुआ, outflow हुआ, or at the end of the year what is the cash balance available to the organization. So here this is all about this financial statement. Okay, now anyone have any doubt or query, you can ask, because I expecting the interaction more. Yes.
Any question from the participants? Participants, you can write your query or your doubt on chat box also.
Yes. Because see, the session I have prepare accordingly. Suppose if any new entrepreneurs would like to start his business, so how he or she will going to be see the financial statement, and how is just basically simple. मैंने अभी इस कंपनी का एनुअल रिपोर्ट नहीं ले लिया है कि उसके बेस पे आपको मिस कैसे क्योंकि सिर्फ at initial stage how or he or she will going to be prepare the financial statement. Accordingly I have arranged this session. Yeah, I have that perspective. That is why, because the title is entrepreneur for the especially entrepreneurs. So at initial stage, entrepreneurs will have to basic information about all these things. And yes, I am also expecting some criticisms from participants also. There is some, if any lacuna is there, then also you can just suggest to me also. And I'm expecting more questions from your side. Yes, any participants have any query or doubt?
So might be they are not having any doubt because you explain everything in such a simple and easy manner.
Thank you, ma'am.
Thank you so much, sir, for the wonderful session.
Okay.
Of course, we learn a lot, new things, new concepts, sir, like income statement, balance sheet, accounting concepts and conventions, deep knowledge about cash flow statement. Definitely, sir, it's a very informative session.
Thank you, ma'am.
Participants have any doubt, any query, then feel free to ask from the sir.
Tomorrow also in the morning we have this one session about the financial statement.
Sir?
Yes.
Then, sir, thank you so much, sir.
Okay. Thank you, ma'am.
For joining us, sir, for accepting our invitation, sir.
Thank you, ma'am. Shall I leave?
Yes, sir. Yes, sir. You may leave, sir.
Okay. Thank you, ma'am.
Mulista, ma'am. Yeah. Participants, a link is there in chat box. Please do fill the quiz.